Welcome to this week's Cattle Call. I'm Susan Littlefield. Joining me is Brad Kooima with Kooima and Varlick out of Sioux Center, Iowa. I am on the road on vacation, but I can't go a week without having to talk to Brad about what's going on in these markets, especially when we've got a lot of interesting things happening. A Fed talk on Wednesday, basis that is driving these guys absolutely crazy when it comes to even attempting to get grain. Having said that, we've also got some cash prices, some happy, some not so happy with what's happening out in the country, maybe hoping for a little bit more money. We'll talk about all that today on this week's episode. So, Brad, let's start out right there. Let's talk about what we're seeing when it comes to this cash cattle market at this point.
Well, I think that's a great place to start, Susan. Thanks for having me on, by the way. Is that a lake in the background? I think that's definitely a lake of some sort.
Yeah, with some great suggestions from you. So we're doing good.
I hope you have fun. It seems like our cattle market the last while, last couple of years, maybe even, we seem to have regressed to a deal where it's like we've all become Missourians, show me first and then I'll believe it kind of a mentality. So it's almost as though our futures market now seems to have to wait for this proof that the cash market is a little bit better. I was a little disappointed today, and I'm not going to lie, a little bit disappointed yesterday while we were generally higher on the front months. I actually thought that the news was pretty fitting of maybe even a better day than what we ended up with yesterday or today. Up in our neck of the woods, I feed cattle. If people don't know that, I'm sorry if it makes you feel bad, but I do. I got $1.45 yesterday for steers that last week I was bid 143 on. So I thought, hey, that's a good sign. Market's coming around. But there seems to be in other regions, everybody's like, well, and there's no trade yet, and we think it might be higher, but we don't know for sure. And so maybe that, I don't know, impatience, is that the right word, with waiting to see cash? And I'm not going, well, it's only Wednesday. You typically don't trade cattle till Thursday or Friday anyway. So I think the thing's all right. It's just, it seems like it takes, the old saying, a bull market needs to get fed every day. Maybe there's something to be said for that, mentality right now.
Is there any fear? I know that the Feds had their talk that came out today after their meeting. So about 1:00, they started to release that information. Did that add the extra pressure to this cattle market this week?
Great point. I think, yes, I think that particularly when you remember last month's fiasco where, there was a lot of disparaging comments along with the Fed release of, hey, we're not anywhere near out of this recession. We got tough times ahead, yada, yada. And you saw a real big sell-off in the stock market. And of course, the cattle are unable to fend that off, to separate themselves from that. So I think that there was a little posturing ahead of that too. I haven't had a chance to give you the whole analysis, but the Fed did raise rates by 0.75 of a point, exactly as expected. I'm watching a little bit. I apologize. I'm watching a little bit what's going on with the stock market. We broke, and now we're down a little, but not severely. So it seems as though the financial markets are taking this with, okay, that's about what we thought. Which I guess is about as good as you can expect at this point.
Well, we've got harvest underway, and it's been great to see all these pictures coming across social media, but yields aren't coming in as expected, like many had hoped. So how is that changing the basis and causing for some nervousness maybe for these cattle buyers who need the feed?
Well, it's funny you bring it up, because I spent off and on most of my morning trying to do a little bit of I'm a cattle guy first, but trying to do a little bit of a little more of a deep dive into some of this, what expectations are going to be on what's going to cost to feed these cattle this year, right? And there's some real regional imbalances again in the supply of corn. I sit in a spot where it didn't rain very much and our crop is not great. We went through the summer here with $1.20 over basis. That's narrowed some, but wondering just how the basis is going to be. It's very complicated. You go 100 miles to the east of me, there's an ethanol plant today that announced that they were going to shut for 3 weeks, not because they can't get corn, but because of the lack of profitability, because of the price of crude oil versus the price of corn. I know trying to source DDGs is a challenge here too. So that's telling you that the grind has slowed way down on that deal. I think it's relevant though. Your question is, when you talk about one of the great have-nots would be Texas, right? Mega drought. Talked to a producer there that told me he's paying $2 over for corn, $2 over December corn. That's $8.85. Okay. I don't know how in the world that works in a ration. And I don't think it does. And so what happens is we sell cattle, right? short term a little negative, long term not negative at all, and it's really reflected in this week's grade statistics. I mean, the grade in some places just absolutely collapsed. I'm grabbing my notes here, but Nebraska down about 7%, Kansas down about 4%. This is choice, and Texas a whopping a little over 10% drop in the grade. So that tells me that we're super current, and that's not negative. So there is a little bit of light at the end of the tunnel, right?
So we have a cattle on feed report that comes out on Friday. What's your early thoughts ahead of the numbers?
Well, we're all waiting to see this placement number finally recede, right? I mean, we've had monster placements because of weather, because of the drought, particularly in the South. I thought maybe this was the month we'd see some drama to it. The guess is about 98%, down 2%. And I get both sides. If you talk north, a lot of grass generally. Guys kind of want to keep the cattle as long as they can. We've got the yearling run about wrapped up here already. I could go with a lower placement number. Now, there is still some guys in the South that are still talking about there's not enough wheat pasture, enough confidence in the wheat pasture that they're still seeing a big move of cattle. If there's a surprise to me, it would be that the placements are a little less than that 98%, Susan. On feed is guessed at 100 or the same as a year ago. The marketing number is guessed real high, and you'd almost think it would have to be too. The slaughter's been huge the last several weeks. So let's hope that marketing number is a real, solid number. And to me, that's still the most important number, is a measurement of currentness.
All right. Well, thanks for joining us this week. Look forward to talking to you next week.
Sounds good. Have fun.
I will. Just a reminder to folks, commodity futures and options do involve a substantial risk of loss that aren't suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.